Good afternoon, everyone. I hope you can hear us very well. Uh, Welcome to today's session. It's about expanding the footprint in emerging economies. We've been here, we've seen a lot of development with big developed economies, and we thought we should do something about the emerging ones as well, because there's a big talk about what's happening in the emerging countries. And there's still a lot of wheel behind that in terms, is there a real opportunity or not? So we thought we'll get some esteemed panel members here who can tell us actually what's happening in their respective countries which they represent. Just a quick first introduction of the panelists. I'm Pankaj Ranjan. I'm the head of Jones Lang LaSalle for retail for India. Along with me, I have Chet. She's the CEO of Capita Malls Asia Limited. Chet, can you just tell us about yourself?
Can you hear me? Yeah. Sorry, slight correction there. I'm actually the senior vice president of Capita Mall Asia. So I look after the 5 markets in Asia that we have presence. Capita Mall Asia has ownership as well as management of 96 shopping centers across Asia today. So I'm sure there's lots of things we can discuss about opportunities with us in Asia.
Then we have Mehmet. Mehmet represents the Zolu Group, property group. They are from Turkey.
Hi, my name is Mehmet Even. I am Assistant General Manager of Zolu Real Estate Group and responsible for the real estate developments in Zolu. And Zolu is one of the biggest companies in Turkey, active in other sectors as well, textile, home electronics, energy, and finally in the real estate property. And contributing large project, $1 billion project in terms of mixed use, office, and residential.
Then I have with us Mr. D. Pene Fernando, who represents the Mall Plaza at Chile.
Hi, I am Fernando, CEO of Mall Plaza. Mall Plaza is a company very young, 20 years. It's developed and operate 11 malls in Chile, 3 in Peru, and we are building 5, 3 in Chile, 1 in Colombia, another 1 in Peru.
Then we have Mr. S. Raghunandan from Prestige Estates, India.
Hello. I represent Prestige, which is one of the largest developers of real estate in India. We operate in the southern part of India. I work in the mall business. We have 3 existing centers. We're developing another 6 centers, and our JV partners are CapitaLand.
Before we take the panel discussion forward, just to give you the background and give you a flavor of some basic facts, and then we'll have a vibrant panel discussion. So change is coming, and are we ready for it? That's the basic theme. By 2020, what we are saying is the world rankings and stacking up of economies will change. There will be a drastic movement of some economies going up and some coming down. So leader of the pack will be China, which is currently at number 2, followed by United States, India. Brazil will jump 3 places from number 9 to number 7. So it'll be a more balanced, if you look at it, world in together. So there'll be some from across the region. So it's not be very centric to one part of the region of the world. And this is being done on the basis of purchasing power parity. So currently the E7, which are the G7, which is the global big 7 economies of France, West Germany, Italy, Japan, United Kingdom, United States, and Canada, today are the largest part of the world in terms of purchasing power. But by the E7, which is the emerging 7 top economies, which is the BRIC countries plus Mexico, Indonesia, and Turkey, will overtake it in between 2018 to 2020 from the purchasing power parity. So we're saying the world will shrink from 2010. The gap is already shrinking. But by 2020, the gap would have gone, and it would have been the E7 which will take over in terms of purchasing power. So what's making it grow? Some key facts. In one decade, between 2001 and 2010, the population of just the G7 the E7 countries and some other developing economies we put together has grown by 11%. Retail space has grown by 225%. So there's a huge amount of development which is happening there, physical construction, and opportunity for people to trade. The retail sales per capita has grown almost 3 digits. So it's grown by almost 100% in just a decade. Population has grown the maximum, that's 500%. And currently the contribution of the global sales is in 2010 is 42%. So it is up 7.1%. How it stacks up by volume? By 2014, Asia and Australasia will take over from North America as the largest buying continent from a growth of retail sales. What's driving it? Simple facts. The consumer spending is increasing. The emergence of middle class, which we're saying is the consuming class across the world. There is a lack of current modern retail, but there's a huge demand on the other side, the need for a modern retail, and obviously a much younger population. The top 10 emerging retail destinations in the world, so it's in Latin America, it's Brazil, Chile, Uruguay, Peru, and it's in the Asia region, it's Kuwait, UAE, Saudi Arabia, India, China, and followed by Turkey in Europe. So I'll just now open the discussion with the panel. Chet, out of the biggest region we all talk about is China. So what's been the current landscape of retail in China? What is it all about? I heard there are some few thousand malls there. Is that right?
Maybe just to give a background, if you look at last 10 years alone, China, the average household disposable income has increased, is staggering, it's 180%. So it's that much income out there, and that's how consumption has been. I mean, we have been seeing double-digit growth. And I want to stress that this growth is not just first-tier cities like Shanghai and Beijing, but it's very broad-based. Second, third-tier cities. So, for example, today we're looking at about 1.3 trillion, the first 9 months of this year alone, of retail sales in China. And the second, third-tier cities, actually the growth outpaced the first-tier cities. So a lot of aspirational young populations coming out of the second and third-tier cities. The other aspect of it is that the tenant sales, consistent. You see the year-on-year growth, it's always been double-digit. And again, second, third-tier cities, the hard facts and the numbers of the retail sales that we see is always higher than what we see the growth in the first-tier cities. So with this background, back to your question, right now, I think in terms of shopping centers, reasonable size and good qualities, we are looking at close to 2,000.
So you have 2,000 existing shopping centers?
Across China. But if we look at the ratio of retail space versus the population base and the urbanization program, from CapitaLand's perspective, we are quite confident that China can absorb close to 10 to 12,000 shopping centers in the long haul.
Wow. So you're talking about creating one continent itself in China in terms of retail space.
Yeah. Just to give an example, ourselves, Capital Mall Asia, we own 96 shopping centers in Asia, and we manage all of them ourselves. In China alone, we have 55 shopping centers today in 35 cities. But that's not enough. So we have a mandate within the next 3 years. We want to increase that to 100 shopping centers.
So, Mehmet, coming to you, is the opportunity in Turkey, is it more in line with what's happening in Europe, or it follows more of a Middle Eastern trend? And what's the size of the opportunity in Turkey per se?
Sure. I mean, Turkey I believe, is a very interesting company. Sorry. Although it is very much related with Europe, it's a part of the Europe actually, and surprisingly acting differently in the latest economic crisis, where you can see an economic growth approximately 8%, second in the world after China. Although if I hear the numbers of China, I am really afraid about the magnitude. We
So
are,
it's
of
more of the
course,
volume,
yeah. So we have only around 250 shopping malls in Turkey currently. But the economical indicators are showing a very promising environment in Turkey for now. And it is also very promising for the future, looking at the socio-political position and ecological and economical conditions in Turkey right now. Flow and location are important aspects. And the business dynamics are showing also that proving this fact. So currently Turkey is on the 29th in the ranking in Europe in terms of having shopping center amount. So we are on the back, we are not in front. But in the second rank in developments, for the new coming developments. But if you will be interested in the saturation, saturation is very low at the moment. We are only providing 1 square meter for 10 people who can purchase stuff. So it is very low. And I believe there will be a lot of demand in Turkey in the next 5 to 10 years in retail development.
And is the demand coming from Turkish retailers, or is it coming from global retailers in Turkey?
I think is both, because Turkish retailers know the taste of Turkey. They know how much return they are going to get, and they are expanding massively and a lot. But also international retailers in both ways, investors or retail outlets, are interested to open stores in Turkey because of high returns and low risks. Turkey is being calculated in an emerging market division, but the numbers are showing in different reality. So it is pretty much secure with high return. So why not to invest in Turkey? Therefore, people are doing so. I mean, maybe not all of them yet. They are hesitating a little bit in the moment and viewing actually the current conditions. But I believe in the next year, it will be a big boom, because we personally are discussing more than 5-6 international developers who would like to be partners or investors in our project. So I believe that will be developing further. And in terms of retail, we have a big shopping mall at Zorlu Center. Zorlu Center, we are providing with 5 different functions, a mixed-use project in the heart of Istanbul. So we have for approximately 200 outlets, more than 1,000 applicants, without even knowing the rent level. So they just would like to be in it, both international and...
So it's a short supply market, you're saying? That
Yeah.
there's more demand than supply currently, which is there.
Exactly.
So I think CapitaLand should be looking at Turkey as well.
It's quite the same in China, because in terms of organized retail format, there's less than 20% in China today.
Queue of retailers signing up for a mall before it gets developed?
Yeah, we have about, I personally service about 10,000 leases in terms of accounts that we look after. So there's still a lot of growth in the organized retail, because we are looking at, compared to the West, where certain countries hit as high as 80%, China is only about less than 20% today. And the China's consumers love the environment, the service is one-stop service, and they satisfied their shopping, their dining, they go there for entertainment. So
Just the whole
yeah,
setup.
yeah, it's very high on their desire list, very high.
So, you know, just taking it completely to the different side of the world, Fernando, you represent Latin America. So what's been the current experience because of Latin America in the retail business? How many malls? What's happening in Chile specifically?
Well, Latin America is full of opportunities. 20 years from now, in Chile, there was 1 mall for high-income people, and the average income was $5,000. Today, there are 20 malls, and the income has 3 times $15,000. So, and this situation is going on in Peru, in Colombia, in Mexico. So you have a market of 400 million people that their salaries are rising, their income is rising, and they're moving from kind of free markets to modern markets. Our shopping malls, we manage 14 malls in Peru and Chile. They are different than the US or European malls in the sense that we try to congregate a lot of services in one point. We call them town centers, in the sense that we have retail, fashion, we have entertainment, we have health, clinics, and there are some babies in some malls that get born in the malls. We have government services. We have public libraries. So really, it's a huge town center, because when your salary began to increase, the first thing you want is to have a house. So really, the housing, it's enormous. So the cities expand very, very fast, but the services of the cities, they are not at the same speed. So then there's an opportunity, and we try to capture that opportunity. So we build these new town centers, and we see the same in Peru and Colombia and in Brazil.
So when you're saying these are actually town centers, they become not shopping malls, but they are community spaces. It's all about the community, putting everything what the community wants.
To be frank with you, we start with shopping malls, the same model that we saw in the US, Latin America. We go to the US very frequently. But we realized that very short, 2-3 years, that there was a lot of things that people now want, and the government can give it, like good health, like good education. Now they have cars, so now they don't spend a lot of hours moving from their house to the labor. So now they have, in cars, they have more time, so they have more time for leisure, for entertainment. So we saw that opportunity, and we tried to move fast. We have office now in the best mall. Now people work there. So there are town centers.
Great. So coming to you, Raghu. So the opportunity in India, we keep hearing about it. So how big is actually the opportunity in India right now for retail?
Okay, in terms of shopping centers, we are at a very, very early stage. The first shopping center in India came up in 2004. So we're what, 7-8 years into the game. It's growing hugely. As on date, about 450 centers are being planned. Even assuming, some of them don't see light of day, you can comfortably say about 250 to 300 centers are under development. I think the issue is not so much shopping centers, because they are coming up. And I think good quality shopping centers are beginning to come up. The opportunity in India is really for the brands. We don't have enough quality brands in this country. Ethnic wear, Indian ethnic wear is a large part of the business, which is locally catered to. But if you were to apply the classic rule, I would say not even 20% of a center has foreign brands. 80% are predominantly local, national brands. So there's a very big opportunity. There are huge gaps in the marketplace. For example, there's nothing in terms of entertainment. In India, families go to shopping centers because shopping is entertainment. It's the biggest form of entertainment in this country, where you don't have enough public spaces. Most parts of the country for many months in a year are hot and dusty, and good air-conditioned shopping centers are a great place to go and relax and have a cup of coffee and a meal. Cinema going is big, unlike most parts of the world. We have centers where the cinema often touches between 50 and 70% occupancy. And these are large theaters we're talking of, with capacities of 2,000, 2,500 seats. So they bring in a huge amount of footfalls. But apart from cinema, we have nothing in terms of entertainment. We have very little in terms of other activities, so community spaces, any other activities. But I think it's early days yet.
So coming to you, Mehmet, in the Turkey. So I would want to understand, I think, from two perspectives. One, if I'm an international retailer who wants to get into Turkey, what's the terms of legislative requirements Can I just go and set up shop? Or do I have to take certain regulatory approvals? Is the approval process easy? Or do I need a partner? What is the format for an international retailer to get into Turkey? One, from an international retailer perspective. And secondly, if I'm an international investor and I want to go and set up a shopping mall business, so I could be a pure investor or I could be a developer. So what's the thing on that? So from both perspectives, I want to understand that.
Yeah, I mean, you can compare very much with Europe. So very similar. Regulations are set. So you can easily establish the company of the structure you're interested in. You don't need to have a partner to come to the business in Turkey like in some other countries. The processes are not as easy as in China, but also complicated. So it's a normal procedure. It will take probably 1 week of time until you establish a new company. And if you have tax advisors, there are a requirement of support.
So there is no legislation requirement in terms of minimum threshold of investment,
No.
local sourcing. So I could be a brand out of Europe, just go and, if I want to set up a company with the help of tax advisors and go start taking some good space in a good mall and start trading.
Correct.
And what about from an international real estate developer and an investor? Can they also go and invest in land and build shopping malls, or what's the process for that?
Yes, as soon as you're a commercial company, not private, you can do so. You can purchase real estate properties in Turkey without having a local partner and start immediately with the business. I believe local partners, because of the experience in the market, will provide, as you would consider any other country, but specifically not for Turkey. It will be a good option for you to go quicker in the market advice and understanding. But other than that, it's very smooth.
And have you seen a good amount of foreign investment coming in Turkey from foreign equity or private international developers setting up shopping malls in Turkey, or is it still locally led?
No, there are a lot of large international investors, such as ECE from Germany, like Multi from Netherlands, with a fund together with a Turkish company. They have separated now. There are Deutsche Bank providing finance and development options for different other companies. So a lot of large investments like Redevco, there are different big actors. JLL is active in the market for different consultancy services. So hugely open to outside, and big actors are already in there. I believe the importance of Turkey at this moment is, as I have mentioned in the beginning, being a very stable market with good economical numbers and easy processes in it and with high return. So it's basically a hidden secret for the moment. And I believe it will be very important.
So coming to you, Chet, China, everyone understands it's a huge, huge opportunity. And you just reiterated 2,000 malls already there, and the opportunity to go and build 12,000 malls. That's the size of the opportunity. But is it actually easy to just go and set up a business, both from a retailer and an investor perspective, or you had your own challenges while setting up this business in China?
I think from the developer owner perspective, yeah, we went through a learning curve. So what we did in the early days is we don't go into the market on our own, although the framework is there for us to set up and own 100% ourselves, but we went in with good established local partners. Of course, it takes us many years to locate such a reliable partner. It's not an easy thing to achieve. And because of the good partners that we had, we managed to put in place our early days projects in very centralized transportation nodal hubs, and with huge catchment. So we're very fortunate from early days. We have our first phase of projects that take off very successfully. So it's not so painful. We don't have to do too much damage control. And then we could look forward, continue acquiring more land, continue building on our expertise and our human capital. And just to give you a sense of our progress and our speed of growth, we opened our first mall in China, in Raffles City, Shanghai. I still remember it's 2003. So within the last 8 years, we now have 55 shopping centers in China. I don't think we can do it on our own day one so successfully. We didn't have good partners then.
So if you were to grow to, you're saying you want to double the size, so you still would need a local partner to grow? Or now can you say that confidently we go out and do it on ourselves?
Well, I don't want to sound too boastful, but we learn fast. We pick up the do's and don'ts in the market very quickly. We're very hungry. And I will say that the last 4 years, most of the new projects that we developed are 100% on our own.
So
majority are 100% on our own, but we still have some good opportunities that comes along. Like recently, we just signed a huge project. It's a 2 million square feet net lettable area in Suzhou with a government-related company. So when we have really wonderful opportunities like that, then we'll take on a local partner. But by and large, majority of the other projects, we either buy into existing properties that is, the owner is inexperienced, they are struggling with it, and we see there's potential. We buy over and we do asset enhancements. We also go into brownfield projects that are built halfway, and when they run into cash issues, we come in and we buy over. We also go into government and private land tenders, and we do greenfield projects from the ground up. Yeah.
And so this is from an investor or a developer perspective. But what about the international retailer community? So the retailers who have come in there, so have they also gone and first tied up with a local partner, or have they gone and set up shops on their own?
In terms of the legal framework in China, it's very much like Singapore. There's nothing stopping the international retailers to set up 100% on their own. But the challenges and the difficulties about international retailers coming into China is always, one is, how much do they really understand the China consumers? Do you have the true insights? What really is that China consumer? That whole creature out there. Because like ourselves, we can be bilingual. I speak Putonghua, but I'm not bicultural because I don't live in China. I go there for business trips, so it's still not enough. So of course the partner can give you that benefit. However, to build a network of very reliable contacts and to find a very experienced and trustworthy partner, that is a different ballgame altogether, right? Yeah. We all know. And the other thing about coming into a market like China, I'd like to just highlight that China as a country is not a single economy. It's a continent economy. So if you want to be successful in China, you must be prepared to come in to build skill. Because what's happened on the first tier, second, third tier city is different. What happened on the coastal city, a lot of people think China is Shanghai, but that's not it. The rest of China is so different and so huge.
So check if somebody is a new brand who wants to enter into China, can't he just pick up one region and populate it, or you're saying that he has to have a strategy for the entire China piece together, stitched up, and then only enter? Yeah, you can do it like a region by region, or you have to?
You have to do it well and then move on. I mean, one of the suggestions I can offer is, for example, many brands has worked with Capital Mall Asia. Instead of just, doing the quantum leap into China, because they also have challenges with the language, is Putonghua. So they actually use us in Singapore as a springboard to China. So Singapore is a very open economy, very conducive for investment. Everybody speaks English, the business language, and rules and regulations are very transparent. So we have many retailers from the international market. They come through Singapore, they work with us. We have 20 shopping centers. For a very small country in Singapore, we own and operate 20 shopping centers. And after they understand a bit more of Asia, then they are very comfortable with us. Then they grow into China, and straight away they have about 30 to 50 shopping malls that we can offer them, depending on their positioning and their kind of price point and the cities or the region, like you said, they want to go into.
specific region
Yeah,
as well.
so then we offer a very different route where you don't have to take a major quantum leap. You can go slow and steady, but at least you know that you are on the right way, and you're very focused on the growth path.
So you need to have a full strategy also in view when you're entering that.
Yeah.
So, Raghu, just since I know a bit about, because I come from India as well, I find it very contrastingly different what Mehmet is told about Turkey and Chet has said about China, that it's a very open country. Anybody can just go set up a business, start trading, and probably get licenses in a week's time in Turkey. Is it the same situation in India, or I think it's drastically different?
Yeah, one feature quite similar between India and China is never treat them like one country. India is like 25 or 30 small countries rolled into one, which exist as one country. Every 100 kilometers, the language is different, food is different, habits are different, lifestyles are different, religion may be different. So it's like a continent. So I think that's where the similarity ends. Let's start with consumers first. The middle class in India is not the middle class as someone in Europe would know it. It is completely different. I think the biggest investment, whether you're on the shopping side or on the retailer side, the biggest investment anyone can make is to understand consumers in India. Because without that, you're dead. So that sort of, how easy or difficult is it to do business in India? One thing I can guarantee you, India will teach you patience, okay? A lot of patience. Because for a shopping center, you can enter with anything up to 100% ownership. The only requirement is it must be 50,000 square meters or more, and it should be a greenfield project. So unlike China, you can't buy an existing shopping center. You can buy one under development or if it's just starting from scratch. The challenge in shopping centers is land acquisition. Land records are not clean, they're very difficult, there's a lot of corruption involved at various levels and so on. So it's not easy. It's very critical to have a local partner who understands and can manage the environment. That's why, we have a good partnership with Capital Land because they bring in a huge amount of expertise and know-how in running of the mall business, and we bring in our local expertise and management. And I think that's the way forward for most shopping center developments in India. If you flip over to the retail side, there are two categories of retail, multi-brand and single brand. In single brand retail, 51% foreign ownership is allowed today. The government has just recently said it is thinking of taking that limit up to possibly 74%, maybe even 100%. We think that's where there will be some impact in India. We don't see foreign investment being allowed easily for some time to come in multi-brand retail. Who's multi-brand? Really the hypermarkets, the Walmarts, the Carrefours, and the Tescos. But, having said that, let me give you a couple of examples of retailers who entered the country, exited, and have now come back very successfully. One is Marks & Spencer. They came in under a franchise arrangement with an existing partner. Everything about that business was wrong. The size of the stores was small. They started with 3,000 square foot stores with limited number of SKUs. The whole thing was a disaster. They withdrew that. M&S have now come back in a new company with a local partner where M&S owned 51%. It's one of the fastest growing international brands in India. Similarly, Zara entered the market a little over a year ago, now have, I think, 7 stores and are now gearing up. By the end of next year, they should be at double that number. So I think there's been a lot of learning which has happened that way. So I would think, irrespective of ownership, just like the shopping center business, it's critical to have a local partner. More than anything else in retail, I think you need a partner who will help you understand consumers. But without that, I think you're asking for trouble in India.
So coming to you, Fernando. So we've heard Raghu give us some watch outs and caveats. So from regulatory perspective, is freely foreign investment required, easily available, and is it easy to put in money and develop, and even from a retailer? Or is it you need a local partner, as like for India, you need one?
No, it's absolutely free. You don't need a local partner. As this region, the income has been growing, retailers, at the first step, they have franchise. So they have a local partner with the franchise, And when the volume of the amount of business it's permits an operation, they get into the country or the region. Also, in Chile, Peru, and Colombia, department stores are very important because they give credit to the customers. And when your salaries or your income is growing, then you have the capacity to have debt because you can pay. So the department stores, they are very wise. They go to clients that regular banking doesn't go. So they have increased the operation a lot. And then also they bring international retailers to the department stores, like a corner or like a store in the department store. And when that operation also have a amount that permits a business, then the international retailers they are by their own. So. Also, it depends of the health of the market. In high-income market, you will find 80% of international brands, and in middle-income market, you will find 30–40% of international brands, and lower-income market, you will find 10%. But they know, because this has happened in the time, that the operation it's expanding. And also, we as developers of malls, we are very focused on our clients, and we are talking with the retailers every time. So we are moving the mix, we are moving the products from local brands to international brands in the sense that the market's growth.
So, Chet, coming to you, like we heard from Raghu that about India, that there are some challenges as well. So on the other side, we've been talking about the opportunity. So what are the basic, if I was to say, which is the basic caveat or the watch out if somebody who's setting up an international business comes into China, you should be careful about, or what's been the flip side? Is there been some bad experiences as well in China, per se? Or have you heard any stories or something which somebody who's coming in the first time should keep it in mind when he comes in?
I think for retailers from the international market, a very fundamental mistake you should not have to pay a price for is be very careful the developer that you work with, or whoever you have a contract or sign a lease with, because making beautiful brochures, showing you all this wonderful video fly through. They're going to build the most iconic shopping center in the heart of the city. Those are very easy. You can pay all the consultants out there to put in all these wonderful graphics to tempt you. But when the project is finished, the positioning of the mall that they promise you, the neighbors that are supposed to open, does all this materialize? And in China, there are landlord developers. They even pay brands to come into the mall. And there are people who come in without having to pay a rent. There are landlords who pay for your renovation if they want your brand bad enough. And you literally come in to plug and play. But then when the mall opens, they know next to nothing about operating the mall, how to promote the mall, how to bring in the foot traffic, how to engage the shoppers for repeat visits and loyalty program. So I think a very fundamental thing is you have to really eyeball and select a very trustworthy and experienced landlord developer, because at the end of the day, they provide the trading environment for your business success.
So you're saying the track record or the ability of that developer who's giving you that space is very, very important.
Sure.
And you should vet it out very, very carefully. So Mehmet, from Turkey perspective, what is the single most important thing we should keep in mind from either from a retailer or developer perspective before investing in Turkey? Is there any caveat which you would recommend and look at from your experience?
I mean, Turkey is a really funny space. As I said, it looks very familiar with Europe, but the dynamics are totally different in terms of purchasing. For example, 70 million people are living in Turkey, and 62 million GSM users are there. So how it is going to be possible? So it is possible. So Turkey is a crazy environment.
Okay.
People are really intending to invest much more money. And a second example, credit card users are 46 million. So it is again high number considering the land side and far parts. But I just have given these examples to understand how different is it. In terms of challenges, I believe the most common mistake people are make is entering into the business without understanding the environment. Because if you do not understand this behavior of people, and you think not very carefully as you would act in, because of the investors are mostly coming from Europe or United States or a little bit Far East. So they really need to understand the dynamics of the market, how to invest, how to promote, how to market. Because if you are really approaching in a wrong way, for example, there has been a company who has made an advertisement in saying, we are coming to change your life. So who are you to change our life? So Turkish people are very proud, who are you? So basically those are the major mistakes. You really start business without understanding the dynamics.
What I can gather from all of you, 4 of you here is, it's very, very important. Each country is very unique to invest in. The customer profile, psychology is very different. I have a very small anecdote which I want to end this discussion at. There was a big retailer, international retailer, which entered India. And it was a small mistake they made, and they realized it after they put their merchandise for a couple of months and realized it was not trading. All men's shirts are typically, internationally now don't have pockets on the front side. And in India, most people would prefer a shirt with a pocket. And they could not figure it out why, all the other sections were doing well, but the men's was not flying. Because the Indians like to put the pen on that shirt in their pocket. And later, when they went back and did this small change, is when their merchandise started taking off. So it's very important to understand the psychology of the customer and study that in what works across international markets may not necessarily work. It may need to be tweaked around a bit. So just we're running short of a bit of time, so I will just wrap up by saying if the audience have any questions, and if you have any specific question for a specific panelist, please give us a name and we'll be happy to attend it.
For ourselves, we actually have a booth at, now I think it's 1821. So if anyone in the audience would like to discuss more about Asia, my team and I will be most happy to assist you. And we can always go into more details in our discussion.
Sure. So any specific questions? Otherwise, we're happy to take that. Yes, please.
Can you maybe give us some idea of the level of rents in these countries and also the yields in the countries for the shopping centers?
So the level of rents, right?
Yeah.
Yeah. So what kind of rents benchmark?
So what category or trade? It's very wide-ranging because it depends on the supermarket business, electronics, F&B, or fashion-related. We slice and dice the rental numbers very differently.
So yeah. I would say is that I can say from an Asia experience and from the emerging markets, I think they have picked up all the learnings from the European and the established countries of Europe and America. And they've understood that the margins for each retail category which is there in a shopping mall is earning ability is different. So the paying capacity is also in line with that. So I can say that's how we've seen that in all the growing economies is the rental which will be charged to a supermarket will be very different from a fashion brand. And the difference could be as high as a fashion brand would be paying 3 times the rent of the supermarket guys. So in a shopping mall, say, for example, in India or even probably in China as well. So, and I don't know, how much is it in Latin America? Difference in rent?
It's more or less the same. It depends on the category. But what I would like to add for the other question is that in this region, Latin America, maybe China and India, they're so huge, they change so rapidly, so quick, so fast, that things that function very well today maybe will not function 2 years from now. Maybe you will kill for a car tomorrow because you are in a bus, in a metro station. Okay, you buy your car. 2 years from that point, you will hate your car. You will like a much better car. So the changes are very, very fast. So when you design your mix, when you design your mall, when you design your strategy, you should be very aware of that, how things changes very fast. Your consumers are changing very, very fast.
And also, just to add to it, is that each of these regions are very, very large. The disparity in rentals across from one region to the other will be very, very high. And it's purely depending on the real estate cost, taxes, and also is the buying capacity of the neighborhood where the shopping center is. So, you know, if you take up a country like India or even China and Brazil, the rents variation is going to be humongous. So it's going to be really depending on your brand, also which city would you enter into first, and which part of the market, or in terms of are you entering the luxury segment or the premium segment or the mid-market segment, will determine the rentals per se. But as I said, these countries, the kind of offtake, and with big developers like CapitaLand and the other more mature developers entering in, the trends are very, very similar of charging rentals is on the basis of the earning capacity that brand can generate from that store. So it's really dependent on how much you can generate, and it's not about the rate per square feet, because the rate per square feet is really for residential and office spaces, but for retail, it's about how much trading you can do there.
Maybe just to supplement the comment, we keep track of our tenant sales very closely. We watch the numbers every day on the dot at midnight. The system comes in with all the report. Say, for example, China, our portfolio of operational malls, the overall tenant sales grow about 13% year on year. But because of the Chinese consumers' love for international brands, for foreign brands, we have seen more than 20% growth for foreigners who have opened in our shopping centers. And away from the first-tier city, when you go into the second, third-tier cities, the foreign brands can achieve sales growth of more than 30%. And if you are very popular, new-to-market brand, I've come across a crazy brand that it hits close to 80% year-on-year growth, because the fundamental thing is the consumers in China, their love for foreign brands is unbelievable. I mean, they just have such high desire and aspiration to own foreign brands, be it the luxury, the fast fashion market. In fact, this year, China has already surpassed Japan as the #1 country in the world for luxury goods. And that 2020 that Pankaj just showed this earlier, China will be the #1 country that is going to manage and be the leader for the luxury market. And they will contribute more than 20% of the global turnover. Yeah,
I've heard the story that Louis Vuitton in some of the stores sells one bag at a time, because the queue outside is so big, they didn't want it to be circulated, that the bag should be so easily available. Yeah, that's a real fact which I've heard about China.
Yeah. I don't know anyone is from Prada here today, but Prada last year, they did a 75% increase in business for China market alone. That is even pre-IPO. And today, 1/3 of their group's turnover comes out of China. And I think most of you may have, you're aware, like Tiffany, in USA, they will not think of going to second, third-tier towns or cities. But in China, they are going into those, because Tiffany stores in China have the best sales in the whole world. They are doing about $3,008 US per square foot per year, and their entire portfolio in the world, they can't even do anything close to 3,000. So these are just numbers that I think we're still at the threshold of what's happening in China today.
Thank you very much. So just to sum it up, so we believe that the emerging economies have a huge opportunity. If you have any specific questions, we'll wrap up the session now, but the panelists will be here for another 5 minutes circulating around, or you can visit the respective stalls. So we have an India pavilion, we have for China, we have Capital Land also putting up a big at 5 point, what's the stall number you said?
Oh, sorry.
It's okay.
I think it's 18, aisle 18 and booth 21, 1821.
1821. So you could just visit there. So thank you very much for being a very patient audience. Thanks very much. Thanks to the panelists as well.